In this week's episode of the Stockscores Market Minutes, we're going to talk about how to sell some of these really hot day trades that we've had lately. Stocks that go up very quickly, but then also come down very quickly. Plus, I'll do my analysis of the overall markets. We'll figure out where the S&P, the NASDAQ, the Russell, the Canadian market. We'll look at some cryptocurrencies, gold, oil, and then, of course, day trade of the week. And finally, we're going to do a market scan that will help you find the next hot stock. That's all coming up. So if you're a day trader, you will probably know that there have been a number of stocks lately, particularly this past week, where they make really big gains and then they end up giving back a lot of those gains. As day traders, we want to ride the stock for as much as possible, capturing as much of the gain as possible, but also know when to exit at the ideal point. Now, there is no method that will always get you out at the best price, and we shouldn't try to sell at the high. That's really not realistic. What we want to do is look for a break of trend. So when a stock is in a nice strong upward trend, we want to look for a break of the trend line. Now, there are two types of trend lines to watch for. One is a parabolic trend, which looks like a curve to the upside, and the other is a linear trend, and I'll show you an example in a moment. Well, whichever one the stock is showing, when that trend is broken, that is when it is time to exit. You have to be patient, however, because some of these stocks can make considerable gains along the way, and you have to allow them to make little pullbacks through the day as long as they don't break the trend line. Now let's take a look at an example. This is SGOC from Friday. It had quite a good run. You can see the run was started early in the day there, well actually around midday. You will see my action candle indicators firing early in the trend, and it was breaking from a decent pattern. So that's a sideways pattern, making action candles. You can see the volume picking up. So a lot of the things that I teach people to look for in my active trader course, they were captured with this stock. All right, so it gets moving. Once it starts to move, now you have to try to build that trend line. And what I like to look for is the first pullback. So it hits a high, it pulls back a little bit, and then it starts to go up again. Once it does that, we have a point that we can draw a trend line across. So looking at SGOC, I can start my trend line where the trend started, and then look for that first pullback and just draw a line across it. So what I've done now is I've used the starting point and what I call an inflection point low, so a pullback point, basically where the trend line touches. Now I've defined that trend line. Now here's how it works with parabolic trends. When the stock runs up and away from the trend line, that is a parabolic trend. All right, and so we broke the parabolic trend line right up here. The linear trend line was broken there when it came down through that straight upward trend line. Either one was a good sell signal. The parabolic trend, the more aggressive, and then the linear trend, the less aggressive, but either way, it led to the stock going lower. And if you watch for that, you were able to get out before the stock fell apart. All right, let's get into this week's market analysis, starting off with the U.S. markets. And this is, of course, the S&P 500, starting us off as we always do. S&P 500 had a little bit of a scare this week. This linear trend line was broken. Now, it wasn't that big of a deal. And the reason is it was breaking that linear trend line from a new high, not from a falling top. In addition, on the longer term chart, which I'll show in a moment, the trend was still intact. So it was, a cautionary note. The market gapped down and then it proceeded to move back up again. And the market has managed to move to new highs after that little bit of break of trend. And so it's actually still okay because it hasn't broken an upward trend line from a falling top on any time frame. And therefore the S&P 500 still looks okay. Now, if you look at the longer term chart, you can see that this upward trend line has been in place for a long time. We could probably draw it more like this now. This nice upward sloping channel. And until we start to break down through this, ideally from a falling top, although it doesn't have to be. If we break that upward trend line on the weekly chart, that is when we need to get worried. I know many of you are thinking stocks at this prices don't make any sense, but it doesn't matter what makes sense to you or I. What matters is what the market cares about. And until the trend line is broken, do not step in front of this market with short sells or by selling stocks that are in upward trends as well. All right, let's take a look at the NASDAQ 100. It's also in an upward trend, not as sustained as or long lasting as the S&P 500, but you can see it runs up, comes back, runs away, comes back, runs away, comes back. It just keeps bouncing off of that trend line. Again, until the trend line is broken, stick with the market. It looks pretty good. On the IWM, which is the Russell 2000, there you can see that the small cap stocks in the US are not participating in the upward trend. They've been going sideways for a number of months, and that is why the retail trading, the more speculative stocks, they really haven't done well in the last little while. However, the market for the small cap stocks, the IWM, is building a nice pattern. It's called an ascending triangle. You can see I've drawn, or highlighted the rising bottoms here. All we need to do now is just break out through that 233, 234 level on IWM. And if that can happen, then I think this market will go back into the upward trend that it had at the end of last year into mid-February of this year. So something to watch for because it's getting close. On the Canadian markets, TSX in an upward trend. It also tested the upward trend line a little bit on Thursday, but it held. It still looks okay. On the TSX Venture, like the small cap market in the US, the micro cap market in Canada is also going sideways. On currencies, US dollar working on bottoming. It's made a double bottom and it's broken this downward trend line. It now needs to move up through this resistance level from this double bottom. Then it starts to maybe move higher. It looks, I would say, neutral at this point, but if it can get up through that line that I just drew, it would look a little more bullish. On cryptocurrencies, GBTC, which represents Bitcoin, looks more likely to go lower than higher. Ethereum, ETHE, which is the ETH trust, it is also doesn't look great. It's got falling tops. It's got pessimism. However, it's got pretty good support in this range from early this year. And so I don't think it has as much downside risk as Bitcoin. On commodities, here's our gold chart. It made that little breakdown. It hasn't followed through from that. So I'm starting to think it's more of a neutral pattern right now. It's holding its own, doesn't look particularly good or bad, just kind of neutral. Oil is in a strong upward trend. It has been that way since November of last year. It is coming into this pretty strong zone of resistance here. Oil traded for a long time in that price range, and it's getting up to that. So there's a lot of euphoria, especially in some of the junior energy markets, and I would be cautious with some of those stocks, not because they're giving any exit signals at all. They aren't, for the most part. But because oil is getting into a zone where it could start to see some profit taking, you may see that oil price break down, in which case that would follow through into some of the stocks. So don't chase stocks in the energy market higher. If they're making good entries, initial entry signals, that's fine, but be pretty cautious with buying new positions. It's more a holder's market right now. All right, looking at fear then. Fear is at a low again, really no fear in the market. So bullish on both time frames for US and Canadian stocks. Gold I've raised to neutral on both time frames, and oil bullish on both time frames, although a little risky. Trading action started to pick up this past week, and that makes sense as we enter earnings season. However, conditions will improve even more for the speculators out there if the IWM can break out of that sideways trading range. Large cap stocks are getting risky. Watch for a break of the upward trend line on things like the S&P 500 or the TSX 60. No sign of that yet, but something to watch for. Gold is quiet, but it is stabilizing. And as I said, oil is strong, but it is coming into resistance. All right, let's talk now about the day trade of the day. Day trade of the day is something I just use to highlight a stock from our active live service, where I have very powerful computers monitoring the market all day long. You can learn more about that on the Stockscores website under the trader training area. And today's or this week's day trade of the week is Pitney Bowes PBI. It started the day on Friday with an action candle early, and that was a pretty good setup. It had some issues with the longer term chart, which made it less than ideal, but still pretty good. What I want to highlight is how we might sell this as well. So the initial entry was here, and on that entry, you would take 900 shares for every $100 of risk. Well, the stock went up quite nicely, and this is where you can define that linear trend line that we talked about. So if I take this line tool and just bring it up until it hits that point there, now I've drawn that linear trend line. It bounces off of it, it bounces off of it, and then finally it breaks down. So that was your exit signal on the initial entry. And that was a profit of 9 times risk. So for every 900 shares that you bought, you had a $900 gain. And that represented just under a 35% return on the trade for the capital required. Now, earlier in the video, I said that, sometimes we sell these things. That doesn't mean that we can't buy them back later. And that was the case on this stock when it came alive later with another action candle breaking from low volatility. You can see right there, the stock pulled back for a bit. It went sideways, and then it came alive again. And that gave you another chance to make a quick little run. And this time, the upward trend line broken right in here, and then from a falling top. Not as profitable as the first trade, but still a couple RR in it there, and that was also fairly nice. All right, let's jump into the Stockscores market scan. And what we're going to do this week is a really simple scan for Stockscores members to try to find those stocks that are coming alive. Now, the footprint, if you will, of alpha, of stocks that can outperform the market, is abnormal volume. And so why not do a scan where we very simply look for stocks that are up a little bit, at least, trading abnormal volume, and just pick a price range that you're interested in. So let's build a scan. Normally we run one of the presets. This week I'm going to build one. I'm going to look for stocks under $20 and maybe more than $1. You could set whatever range you want. I'm just showing you how to set this tool up. Let's say the gain loss needs to be at least 3%. And here's the important one. We're going to select abnormal volume and set that to abnormal volume. Number of trades, we'll set that to 500. So it's not very high, and that may be too low. We'll experiment with those a little bit. I could save this scan as a name, so I could call it abnormal break test, and then click on save scan, run the market scan. It's going to go through the entire market, US and Canada, and it found 28 stocks that meet those criteria. Well, then we're going to look at the charts to see if any of them are starting to come alive, breaking from predictive chart patterns. And out of these 28, probably most won't. Here's an interesting pattern. This is Drone Delivery Canada, and you can see it's breaking a downward trend line. That's good. There is no rising bottom here. That's not great. Volume is good, but it's not like really abnormal like it was back there. So I think this stock is probably bottoming out. It has decent potential. I'd give it a 6 out of 10. I'd like to do a little better than that. So I just cycle through these, looking for stocks breaking from things like ascending triangles or rectangle consolidations or maybe a pennant pattern. Here's a stock that made an abnormal break about a month ago right there. You can see the volume spike. It was building rising bottoms, breaking through resistance with abnormal activity. That was a pretty good clue that it could go higher. And here it is 3 weeks later. It's up, 60, 70% already. So that's the kind of thing we're looking for here, is these abnormal breaks from a pattern of low volatility and optimism. Now we see optimism in a chart by rising bottoms, and what we're looking for is rising bottoms in a sideways pattern. So keep on looking. See, this is not good because it's breaking up into pessimism. It has falling tops. We want them when they're breaking more like it did back here. When it comes alive, this isn't actually ideal, but it at least had a double bottom, abnormal price action, abnormal volume, and it went up from there. So that's what this scan is going to find. If you run this scan every day, you'll find a few each week that come alive like this with these decent patterns. Here's one that's pretty good. This is the long-term chart of Hallmark, Hall, and you can see the pickup in volume on the weekly. It's a little higher this week. It's trying to break. There's a little bit of abnormal price action on the weekly chart. If we go back to the daily chart, it looks a little more obvious. You can see rising bottoms, flat top of resistance, coming alive with abnormal activity. It's not ideal because it's a little bit volatile into that, but still pretty good. I'd give that a 6.5 out of 10. Let's see if we can find something worthy of a 7. Now, when I give these numerical ratings, and this is something I do for my daily market scan video, which you can subscribe to at tradescores.com, when I give these numerical ratings, what they really are is my assessment of the probability that it will go higher. So when I say 6 out of 10, I think it's got a 60% chance of working. 7 out of 10, 70% chance of working. You know, when we trade, we're really playing a probability game, trying to find those stocks that have a high probability of working and then just apply basic risk management to profit overall after we do many trades. All right, well, that has been the Stockscores Market Minutes. I hope that you've enjoyed it. If so, click on the like button, subscribe to the channel, tell your friends, tell your enemies. Most importantly, next week, trade well.